What's going on, everybody? Shiraz Ahmed here. Now it's RSP season, and today I'm going to be addressing probably the most common question that I get as a financial professional. We're going to discuss the 5 main differences between a tax-free savings account and an RRSP, or Registered Retirement Savings Plan. So this is really geared towards a lot of my Canadian viewers, and I'll make a US version in an upcoming video, so stay tuned. Alright, welcome back. So, before we get too deep into the weeds on the differences, as a licensed professional, I need to give you my obligatory disclaimer. Now, the content in this video is for informational purposes only and shouldn't be considered to be advice. As always, if you have questions about your individual circumstances, please contact a qualified financial professional. Okay, now with that out of the way, let's get into it. Alright, so before we get into the ways in which these account types are different, let's first start by clearing the air on what they even are. A tax-free savings account, or TFSA, is a type of investment account, not an investment product. Now that's a common misconception. This account type allows you to save and invest money without paying taxes on any investment income or capital gains earned inside of this account. Now, contributions made to a TFSA are made with after-tax dollars, which means that you can withdraw the money from the account at any time, tax-free. Now, the Canadian government determines the annual contribution limit for the TFSA, and that, of course, changes over time. Now, on the other hand, the RRSP, or Registered Retirement Savings Plan, is a type of investment account, again, designed to specifically help Canadians save for retirement. Contributions made to an RRSP are tax deductible, which means they can actually help you lower your taxable income in the year that you make that contribution. Now, any investment, income, or capital gains earned with this account are tax deferred, which means they're pushed into the future, meaning you don't pay taxes on them until you withdraw the funds in retirement. Now, the Canadian government also determines the annual contribution limit for the RRSP, and it's based on a percentage of your income up to a maximum threshold that changes year to year. All right, now that we're all on the same page on what these account types are and some of the common misconceptions, let's get into the 5 major differences between the two of them. Now, obviously, there's a lot more than 5 ways, but we're going to focus on the main ones here. All right, so number 1, contribution limits. Now, the first difference between a TFSA and an RSP is the actual contribution limit. Now, the annual contribution limit for a TFSA is currently at $6,500 as of 2023, while the RRSP's contribution limit is 18% of your earned income up to a maximum of $30,780 for 2023. Now, this means you can contribute more money to your RSP than your TFSA up to that maximum limit. Now, difference number 2 is taxation. With a TFSA, any investment gains or income earned within the account are not subject to taxes, and you can actually withdraw your money tax-free at any time. However, with an RSP, your contributions are tax deductible, meaning that you can actually lower your taxable income by the amount that you contribute. But when you withdraw the money from your RSP in retirement, it will be taxed at your marginal tax bracket at the time of withdrawal. All right, this brings us to difference number 3, withdrawal rules. So the rules around withdrawals actually differ between a TFSA and an RRSP. So as I mentioned, you can actually withdraw funds from your TFSA at any time, and the amount withdrawn doesn't really affect your contribution room. However, with an RSP, you can withdraw funds, but you'll have to pay the tax on the amount that is withdrawn. And the withdrawal amount will be added to your taxable income for that year. All right, difference number 4, which is the purpose of these accounts. And that really does differ quite a bit. A TFSA is a great option for like short-term savings goals or even like an emergency fund for a down payment on a house. Now, a TFSA is also a really valuable tool for retirement savings, but given the account's flexibility, it can actually have several purposes. Now, on the other hand, an RRSP is specifically designed for retirement savings. So contributions to an RRSP are intended to help you save for retirement while also lowering your tax bill during your higher income years. All right, difference number 5, which is age limitations. All right, so there are age limitations for each of these accounts. With the tax-free savings account, there is no upper age limit for contributions, and you can contribute to the account as long as you're a Canadian resident over the age of majority. However, with an RRSP, you actually have to stop contributing by December 31st of the year in which you turn 71. And at that point, you have to convert your RRSP into what's called a RIF, or a Registered Retirement Income Fund. And that's a conversation for another day. Okay, so there you have it. Those are the main differences between a TFSA and an RRSP. I think the moral of the story here is that really no account is better than the other. They're really just different and are used for ultimately different purposes. You know, we tend to find that a lot of younger Canadians tend to focus more of their energy and attention on a TFSA when really both account types can potentially be viable options. So thanks for staying until the end of this video. Now, if you found that content to be of value, please consider hitting that like and subscribe button, as it really does help out the channel. Not to mention, that bell icon will make you notified the next time I upload a video. I'll also put my contact information at the end of this video, so please drop me a line if you have any ideas or topics that you want me to cover. Until next time, please stay safe out there, you all. Bye for now.